Is there a secretive trading empire taking over Wall Street? We're about to find out thanks to our friend at Bloomberg. What's going on, everybody? Radio here, and we are back with another video. We reacted to a Bloomberg piece a couple days ago on Chinese EVs, and I really enjoyed it. I thought they did a fantastic job. They came out with another one about a secretive trading empire taking over Wall Street. So we're about to watch and react to that. I have no idea what this is about, but it's relevant because we talked about the K-shaped economy on our last video. And I want to kind of dive deep into this one and see what are they talking about. So let's get into it.
Today, volatility is everywhere.
Stocks rally as the S&P recoups its wartime losses.
Market may be trying to figure out if they should listen to good cop or bad cop.
Certainly that's going to have an impact on global growth.
In the middle of all this, some players are reaping huge rewards. Can you guess who?
They're tech savants.
I think we all can guess. Insider traders. That was the theme of our last video. A lot of insider trading going on.
Highly quantitative, pretty secretive, smart, innovative. They're best in class at what they do, and they're sitting at the top of the totem pole of all the Wall Street firms.
So who are we talking about?
Jane Street.
Jane Street.
Ooh.
Okay, but why are they such a big deal? Well, the firm just made a record-setting haul, over $39 billion in 2025, outpacing the big banks and rivals.
The firm is generating billions of dollars. The pace at which it is doing that is unlike anything that I think people anticipated would even happen.
Even 5 years ago, it would have been unthinkable to paint a scenario where Jane Street would have pulled in more trading revenue than the biggest players on Wall Street.
Money-making at this pace has raised concerns that firms like Jane Street have an unfair advantage.
The high-frequency trading segment is under scrutiny after SEBI accused Jane Street Group of manipulating stock and derivatives markets, a claim the U.S. trade.
I guess if you're at that level and you're like the best in class, best in the world trader, any moves you do is gonna change the market. It's that snowball effect we talked about, where at some point it's not that you're actively trying to manipulate the market. It's that with every movement, market just gets manipulated, regardless of whether you want it or not. And it's just the way things go. But they're gonna go more into this investigative piece, and I'm interested to see what are they talking about when they're saying Jane Street is taking over. Because to me, right, I'm just giving you my impression 2 minutes in. To me, it seems like they're just really good at what they do, and they just got it going on, right? So let's see, what is the narrative?
Trading giant denies.
This unwanted attention is mounting and threatens to reveal more secrets.
Jane Street's combined the world of poker and the concept of solving problems really, really well.
So how long can Jane Street stay under the radar while holding the best cards on Wall Street? Once upon a time, Wall Street was like this. But the stock market has changed.
Dude, when I was a kid and I was seeing those videos of Wall Street, I always wondered, what the fuck are they doing? Why are they yelling at each other? Why can't they work in like a regular work environment? Buy, sell. And then as time goes by, the whole dynamic changes, right? So then the whole buying and selling is all happening through the internet. So then you have even less of an idea of what the fuck was going on back there. It's yeah, man, what a weird era of trading.
Imagine a high-speed game of buy and sell happening on computers all over the world every second.
A combination of innovation and a lot of money moving around very rapidly.
A human blinks their eye in about 400 milliseconds. In about that same time, a high-frequency trading computer can execute hundreds, if not thousands, of trades. That is the kind of tech edge we're talking about.
So what would be a I'm just looking at it from a layman's perspective, and I don't trade, so maybe you guys can help me out here. What is your advantage in all this, right? If this is who you're up against, and these are the people that are trading, what is an advantage that a regular person has that other big firms don't? I think one of the main things that comes to my mind is they have freedom of movement, as in they can just do whatever they want without having to clear it or without having any protocols. So a risky short like the GameStop short is possible by retail investors because not a risky short, a risky buy on GameStop when it's being shorted. That's what it was. Yeah. When it's being shorted, a risky buy on GameStop, it makes more sense for retail investors because they're free to do it without any sort of repercussions of their jobs, right? It's just their money being wasted or not, or they're multiplying it. But other than that, yeah, they don't have anything to worry about. So I guess it's like a little bit of you're just flying on the edge of your seat, just kind of riding that line, and you're just gonna doing whatever you want when you're like a retail investor, like a day trader, but you're just doing it by yourself and all that. I think that's the only advantage that I can think of, where you don't need to clear your moves, or you don't even need to rationalize your moves. You can just like vibe it out. They may work out, they may not, but that there is nobody above you telling you do this, do that. You gotta justify what you're doing, and you gotta report to this, and that, and you just kind of do it and you see what happens. But yeah, let me know, what is there any other edges that I'm not seeing that a regular person would have versus a big firm like Jane Street? I mean, obviously they have so much technology and so much capabilities that it's easy for them to accumulate this much wealth. And it's not easy, obviously, because they got so much, but it's easier for them to accumulate so much wealth and so many winnings and consistently win over time versus a day trader or a personal trader that's, you know, they're taking all the risk themselves, and it's just their money they're playing with. Yeah, I very much want to see what is your guys' take on this?
Is not just identifying the right price, but being able to get there before anyone else to execute that trade.
Jane Street is the middleman. You can think of the apps Robinhood, Schwab, and the ability to buy a share of Apple. You don't know it necessarily, but there are players out there helping facilitate that order.
We have seen an explosion in the type of ways that you could trade any financial instrument. It could just be a plain vanilla stock. It could be a derivative tied to the stock. As these products get traded in different formats and in different geographies, there is always going to be a little bit of price inefficiency.
Price inefficiency means differences. By buying a bunch of something where prices are low and selling it where prices are high, you can profit from the difference. It's a process called arbitrage. And by doing this over and over in milliseconds, Jane Street is making billions. Increasingly, the firm has been holding some positions for hours, days, maybe even weeks. But its matching of buyers to sellers is why Jane Street and firms like it are called market makers. Their role injects cash into this system, aka creating liquidity.
Liquidity is money. And it's very important, particularly when an issuer like JP Morgan is launching a new strategy. The early days of an ETF are very important to provide more liquidity, and that encourages investors to come in and out of ETFs.
ETFs, or exchange-traded funds, are like a basket of assets that trade as one package. They're often cheaper than other investment products, helping more people get a piece of the pie.
20 years ago, I ran a big portion of JP Morgan Asset Management. I had heard of Jane Street, but I had no clue that.
So they're arbitraging these differences in a short period of time. And that's how they're making their money. And they provide liquidity to ETFs. I'm not gonna lie, this is kind of dense. It's dense for me, at least. So I'm interested to figure out what the fuck is going on.
They were an important part of the ecosystem, and that was really a reflection of the fact that ETFs were a small piece of the business at that point.
Jane Street's place in this ecosystem has paid off as the popularity of ETFs have exploded. More are coming to market every year. The money flowing into them keeps growing, and the amount they're trading is pushing 60 trillion.
Jane Street, I think, very early on saw an opportunity to distinguish itself around solving for the complexity of ETF market making at a time where other banks were much slower to put resources into that.
It's worth stopping to appreciate the sheer amount of data being processed here. ETFs are made of dozens, sometimes hundreds and even thousands of individual securities, and their pricing needs to reflect these underlying securities. Designing the rules or algorithms that enable that pricing requires serious chops, and Jane Street employees have them.
The culture of Jane Street is one of puzzle-solving, very mathematical, quantitative professionals.
This has become a very desirable place for smart people to go work at.
Jane Street's...
Yeah, because they actually get challenged, and it's the best of the best they're hiring.
Roughly 3,500 employees split amongst themselves $9.4 billion in compensation in 2025.
And
That's
they get
a
paid
lot of money
very
to
well.
go around.
I've been to every firm on Wall Street in the financial industry, and I've never stepped foot on Jane Street's trading floor. I would love to kind of talk a lot about Jane Street's technology, but I can say this, nobody knows anything about Jane Street's technology that doesn't work there.
Maintaining a low profile helps Jane Street protect its secrets. The company declined to comment for this video.
The interesting thing about Jane Street is, to the outside world, there is no designated leader. It says it's a flat organization. Of the 4 founding members, the only one who's left behind is Rob Granieri.
Granieri is a bit of an unconventional character on Wall Street. He's a Burning Man regular and owns a casino in Mississippi where a John Travolta movie was filmed. And according to his lawyer, his longtime support of human rights is what prompted him to get duped into funding an alleged coup against the government of South Sudan. Even finding photos of Granieri is hard, adding to the firm's mystique.
If you think about it, the only reason a wider audience even started hearing about Jane Street...
I mean, isn't that what you would want if you're a billionaire? These guys are talking about it like it's some sort of, like the norm is to be a famous, well-known businessman that's like always giving interviews and always kind of giving what they think. But that's only a certain amount of them that really would want to do that, right? Even some of the more powerful ones don't like doing that because you just give an advantage to people and you're letting them in on what you're thinking and how you move and how you kind of go about what you're doing. So I'm not surprised if this guy and a bunch of others like him are being secretive, because why wouldn't you be? If you've gotten to a point where you are a billionaire now, I don't know how this guy got it, right? Maybe, it could be I don't know how he became a millionaire from Jane Street, obviously, but we don't know how he started before Jane Street, right? They didn't say. So it's even before then, if you have a game plan of, okay, I'm going to be X, Y, and Z, and you stick with that and you kind of don't deviate from it and you don't change the way you operate because you got rich. I mean, isn't that what works out for the best? And isn't that what you would want? Is, oh, I got all this money, I got all this influence, I got all this power, and I'm not well known, and I can kind of go in and out, blend in and out without it being obvious that I have all this stuff. So you basically get the best of both worlds.
Was because it was ID'd as the launchpad of Sam Bankman-Fried, the crypto wunderkind who flamed out spectacularly.
Connections to the failed crypto...
Whoa! That's interesting. That's very, very interesting. Sam Bankman-Fried, founder of FTX. Also, early investor in Anthropic. I don't know if you guys knew, one of his last big moves before he got arrested and went to prison, was, I think, investing like $40 million or something into Anthropic, and it paid dividends. It multiplied so much. The investment in Anthropic was so successful for Sam Bankman-Fried and FTX that the CEO that was doing the liquidation and was trying to pay people off said, "Oh, we can just pay everybody off just by this one investment." Because it quadrupled or something. I don't know. I don't quite remember how big that Anthropic investment ended up being, but it was a very significant amount that they could have just paid everybody out with that. And yeah, but Sam didn't see any of that money, obviously. He's still in prison.
Exchange FTX keeps nipping at Jane Street's heels, and the publicity threatens to further crack the firm's shell. But it's a very public regulatory matter in India that's shed the most light into Jane Street's inner workings.
It all started when two of their traders were jumping ship to a rival firm. They were worried some of their proprietary trading strategies would be used at Millennium, where those two traders were going, and they sued those two traders. That legal spat, of course, caught the attention of everyone on Wall Street.
The case involving Jane Street's former employees was settled, but the probe into Jane Street's India operation continues.
India's option market has been growing really in the last few years. The regulators in India looked at Jane Street's activity, and essentially they considered it manipulative in the way that they were able to influence the way that prices were moving to their benefit. Now, Jane Street, in their defense, has said that the way that they were trading and the market movement, they were providing a service.
The problem for Jane Street is that the India probe has meant that there are just a lot more eyeballs looking at what they do, how they do it, and how much money they're making.
Bloomberg has learned that China is examining how Jane Street Group participates in its $859 billion ETF market.
So what is the problem in India today could expand into a headache in other markets.
One issue for regulators is that while market volatility can be dangerous for everyday people and their finances, many in the industry directly benefit.
The way markets have performed, the absolute rally that we've seen in the US and elsewhere, the fact that it has attracted a retail investor base like never before, that has meant that people in the middle of the buy and sell orders will just have a successful run, and Jane Street is certainly reaping the benefits of that.
Jane Street's capital.
I feel like a part of it is also, it's the product of just uber optimization of everything, right? Where if cars are becoming more and more optimized to save more fuel and be more efficient, if houses are becoming more optimized to save on energy and use as little energy as possible to do the most, engines are being optimized, phones are being optimized, computers are being optimized. I mean, it just makes sense that there would be a group of people, an organization that is trying to optimize trading on the market and basically trying to benefit every shape and way they can within the market and within other markets too, because they're applying it to other markets as well. They try it out on Wall Street, it works. Move it to India, it works. They move to China, they're talking about that. It's just the nature of everything. When as technology progresses and as time goes on, it's just natural to want everything to be more optimized, to be more efficient, and because if it's just stagnant, if you're running a business a certain way for so long, that's just wasteful. Because you, just by putting in time, you should be becoming more efficient and use the time that you have. That if you're running a business and you're 5 years in, you in your 5th year should be way better than your 1st year. Because in 1st year, you're figuring it out. By year 5, you already figured a bunch of stuff out. So you shouldn't be operating at that same level with the same efficiency and the same time spent on everything, right? You should spend less and less time on things that you know can be reduced, and you should always be trying to optimize it, because then it's your nature of getting good. It's your nature of applying yourself and improving something. And in this case, it's improving your business, where you're not spending the same amount of time on certain things on year 5 as you would on year 1. So it's Bloomberg is trying to make it seem like they're doing all this crazy shady stuff, but realistically, the way I look at it is, they're just honed their technique to a point where They're holding their technique, holding their algorithms, holding their methods, holding their organizations. They just sharpen their tools to a point where even legitimate work might feel like they're cheating. Now they might be cheating. Maybe Bloomberg, I mean, is they're not like really insinuating, they kind of just like hinting at it, and they're just saying what other people are saying. But maybe they are cheating, and maybe they are market manipulating. But it could be just the fact that your advantage is just how good everything is, and the standards you set for yourself. The quality standards are so high that any move you make might feel like you have an edge, you have an advantage, even though you just doing what everybody else is doing.
The stockpile has grown to 53 billion, which allows it to sometimes behave like a hedge fund.
Savvy bets, especially on some of those big artificial intelligence companies like Anthropic, and the surge in valuation for some of those companies.
What was I saying?
Meant a sweet tailwind for Jane Street.
But at the end of the day, a hedge fund, the money that they're trading with is their clients. Jane Street is just reporting to themselves. The money that they make is their own, and the money that they lose is theirs to lose.
Jane Street also enjoys a level of freedom compared to banks, which, after the financial crisis, have to play by a stricter set of rules.
2008 was a traumatic moment. The banks, in the aftermath of it, not surprisingly became the bad guys. Regulation came in and made certain functions for the banks more difficult for them to do. Doors opened, and here came firms like Jane Street. They kind of ran through it.
Just because Jane Street isn't a bank doesn't mean it's not regulated. It is. It has to abide by the rules of the markets in which they trade. And some days they might lose money, but over time, they are developing the systems to be smarter about how they're making money. And sometimes...
That's exactly what I was saying. And also, I'm glad they touched on that. It's their money. So it's even more of an advantage they have over banks and hedge funds like we're talking about. So how can you compete with that system, right? How can you operate even close to that level as like an individual or as like a small business, right? Like, what will be your edge in all this if Jane Street is operating at this much efficiency and this much optimization, where they just figured everything out and it's the best that they're hiring the best of the best, they have the best equipment, the best algorithms, the best people working on everything, and they have so much more money to trade and lose and gotta work with. And they do lose. That's what she's saying. But they win way more often than they lose.
Losing money is how you get smarter to make money in the future.
And they're going to push and prod the rest of the industry to keep up with them. I think the Jane Street story is going to be a long one.
Oh, that's it? Hey, man. I'm not saying this was bad, but I'm saying I feel like this was a whole bunch of nothing. Oh man. Okay, hold up. We actually need to look this up now. All right, here's another Bloomberg piece. Let's see what they're talking about.
Jane Street's record year translates into a $2.68 million payout per employee. Jane Street Group's journey to the top of Wall Street has been a lucrative ride for its workforce. The firm doled out $9.38 billion in compensation last year, more than double the amount in 2024, as the market maker vaulted past its big...
I'm sorry, I blanked out on the title. Jane Street's record year translates into $2.68 million payout per employee. Holy crap, dude. Per employee, and they only had like, what, 3,500, they said? I mean, is that where you want to work if you're even remotely good with numbers? This is crazy, dude. This is the best of the best that are money motivated. The best of the best that are money motivated. A lot of people are good, but money doesn't motivate them. They gotta be doing something. They gotta be creating value in some other ways other than turning money into more money.
Biggest Wall Street rivals, according to people familiar with the matter who asked not to be identified, citing private information. Jane Street's rise has been a boon for the employees and shareholders that have tagged along. On a per employee basis, That equates to $2.68 million on average, almost 7 times as much as rival Goldman Sachs Group Incorporated.
They're really like whipping everybody's ass over there then. Market maker vaulted past its biggest Wall Street rivals. Holy shit. This is crazy.
The market-making firm has become a giant in a corner of finance, helping to facilitate trades in assets from stocks to corporate bonds and exchange-traded funds. The company pulled in about $39.6 billion in trading revenue last year, a haul that outranked Wall Street banks and market-making peers. Jane Street's members' equity, or the firepower the company uses to support its trading operations without having to tap outside capital, has swelled nearly 2,000% since 2016 to $45 billion.
Holy shit.
That funding provides a steady foundation for the firm to use by capitalizing on market swings and piling into startups at early stages. It's also helped Jane Street score big on bets on Anthropic PBC, the AI startup that's received offers for a new funding round that would value the company at about $800 billion or more. Jane Street also has more capacity it can tap, thanks to loans, as well as bonds it issued in the public debt market in recent years. A representative for Jane Street declined to comment. Founded in 2000, Jane Street got its start trading American depository receipts, and then expanded to exchange-traded funds on the floor of the American Stock Exchange. The firm continued to grow alongside the electronification of asset classes such as corporate bonds, which it can more rapidly buy and sell to help facilitate trading. The market maker is known for recruiting mathematicians and puzzle aficionados to power its technology. Even Jane Street's corporate structure is unconventional. While Rob Granieri is one of the last founders still at the firm, the company doesn't have a chief executive officer or other formal top-down leadership structures. Instead, Jane Street is governed by a few dozen partners who hold equity stakes.
Interesting.
Read more. Jane Street's mysterious trading billionaire is smashing records. The firm has benefited in some ways because it's not bound by the same rules that many of the big...
I'm very interested in this part right here. I mean, we did learn in the video that they're recruiting mathematicians and puzzle aficionados, but they don't have a CEO. They just have a few dozen partners who hold equity stakes. So that's even closer to what we're talking about, right? That's even closer to a day trader and a retail trader where you just have a bunch of money to play with and you don't have a top-down structure that you have to take commands from. So the edge we were talking about, these guys already have it, and it's going to get into it a little bit more. They're not bound by the same rules. They're bound by some rules, but not the same rules as the big banks and other hedge funds that are trading. That's so interesting. They really figured it out, huh?
Bank trading desks must follow. Wall Street has long viewed Washington's matrix of banking regulations as overly complex and burdensome. J.P. Morgan Chase and Company recently warned that new regulatory proposals would force the bank to hold on to $20 billion more of capital for no good reason, according to Chief Executive Officer Jamie Dimon. Jane Street also is able to plow some of its money into stakes in companies such as Anthropic. The firm is also in funding talks for cloud computing startup FluidStack Limited and recently invested an additional $1 billion in AI cloud services provider CoreWeave Incorporated. Most bank trading desks and some market-making peers don't count such long-term investments in their trading results. Goldman had a group making bets with its own balance sheet, but spun that business out of its trading unit a few years back. Jane Street has been able to maintain its lead despite facing controversy in recent years. In July, regulators in India accused the firm of manipulating markets while running what had once been one of its most lucrative trading strategies. Jane Street has denied those allegations. The firm also urged a judge to throw out a separate lawsuit accusing it of trading on inside information ahead of the $40 billion crash of cryptocurrencies associated with Terraform Labs. Read more. Jane Street's secrets spill into open and face rival scrutiny. Despite those recent challenges, the firm keeps topping its previous records for revenue and outpacing peers. Jane Street's 2025 trading haul beat Ken Griffin's Citadel Securities, which set its own firm record with $12.2 billion of trading revenue last year. It's set to expand even more. Jane Street recently placed an offer to lease a new London office that will double its footprint in the UK capital.
Well, there we go. Wow. That's exactly what we're talking about. Is they find efficiencies, they became good at it, and then just expand like that. And they have all the edge that we were discussing earlier. And on top of that, their moves in and of itself moves the market. So they're basically this big organization that is creating so much value for themselves and making so much money. And with every movement, they're market making. They're actually changing the way the markets are. Yeah, I don't know. I'll be interested to look more into them. I've never heard of them before. So, hey, you learn something new every day. Let me know what you guys think. Did you guys know about Jane Street? Did you guys know anything about them? What did you know about them? Let me know. Do you know any insider information? You can leak it in the comments. I promise I won't tell. Make sure you like, make sure you subscribe, and I will see you guys next time. Radio out.